Thank you very much. It's good to be back here another year at the Not BMO Pre-PDAC Mining Showcase. For those that want to follow us, we trade under the symbol BRC in Canada and BKRRF on the QX down in the States. I'm told we've also been given a listing in Germany, but I haven't independently confirmed that, so there we go. I'm going to give myself a challenge in speaking entirely in forward-looking statements for about the next 20 minutes. So take everything I say with a grain of salt, but we're moving things forward very aggressively. And I guess, as my lawyer would like to say, I'm going to be bringing you all over the wall here. So I'm going to be talking about our flagship Tonopah West project in Nevada. This is a discovery we made 4 years ago. And in that time, we've now drilled out 100 million silver equivalent ounces at the highest grades in the industry. We just put out a PEA in September of last year, which established us with a head grade of 570 grams per ton. Amongst the silver developers in the world, there's nothing like this out there. We're 55% higher head grade than the next closest pure comp in the industry right now. And it's that grade profile and the fact that our silver equivalents are just silver and gold that lends itself to really wildly robust economics here. So for that PEA, we used $23 base case for silver and $1,900 for gold, and we ended up with an after-tax IRR of just under 40%. We're looking at an 8-year mine life that's going to be producing on average about 8.6 million silver equivalent ounces every year, but what should really stand out is we're looking at cash costs under $12 all in. At those economics, we're starting off with a 2-to-1 NPV to CapEx ratio, so about $326 million after-tax NPV against a CapEx of $178 million. So really robust at that level, but it gets really exciting as you go up. For the PEA, we showed a base case plus 20%, so we did I think it's 2760 silver and 2280 gold, and at that, this moves up to just under $500 million NPV. The IRR shoots up. If you were to use current prices, you're closer to $1 billion when all is said and done. Now that assumes we don't add another ounce or any more mine life to this thing. And since this came out, I mean, these numbers are already stale in the sense we did 20,000 meters of drilling last year. We'll do another 15,000 meters this year, and we're planning to have multiple different re-rates lined up. This is going to be one of the most active stories in the industry from that perspective. Not only are we turning this into Swiss cheese this year with both an M&I conversion program and an expansion program, but we're going to have a resource update in Q3, so we're hoping to have that out by Beaver Creek. We're also going to have another resource update for Q1 of next year. All of that's going to be put into a new PEA by this time next year as well. So you're looking at 3 different studies effectively, and the other big thing that we're doing right now is one of the benefits, I mean, Nevada is a good place to be in the world right now, but our project's entirely on private land in Nevada, patented claims. That allows us to drive this thing forward through permitting aggressively. So we've kickstarted our permitting initiatives with environmental data collection. We're going to be doing a fair bit of geotech drilling, water quality, observations as well. Everything we're doing this year, we want to have be in a position to submit a plan to the regulators next year that will allow us to go underground in 2027. The big idea there is we're going to be doing something, the permits should put us in good position to do a bulk sample underground for 100,000 tons. The stope that we're in that's laid out in our PEA for that bulk sample is about 1 kilogram per ton silver equivalent. So if you guys want to have some fun with numbers, 100,000 tons at that grade and throw in whatever silver price you think we'll be in 27, 28. A lot of companies don't plan to make money from test mining. Our cutoff grade's about 190. We're in a stope that's 980. So I think that's going to put some wind in the sails. This can be developed quickly and easily. So our project, it's when we picked this up 4 years ago, it was thought to be the consolidation of the unmined extension of one of the most famous precious metals discoveries in Nevada. It's known as the Queen of the Silver Camps. It's the reason why Nevada to this day is known as the Silver State. Second only the Comstock lode in terms of historic production. Between 1900 and 1930, this thing produced about 400 million silver equivalent ounces All of that production came from just 7.5 million tons of material. So what that means is it's high grade, and it means the metallurgy here is phenomenal. So we're the first group to come back in since production shut down in the 1930s. And we picked up from the last operating mine in the district. And what we've done since then is we've drilled out 4 kilometers of cohesive, intact vein corridor from the last mine in the district. And this time 100 years ago, Tonopah was known as the richest place on earth. We got this project for $3 million all in. So just some more details on the PEA and just the economics. And keep in mind, this is already stale, and I'll tell you why. But this is something that even if we don't add another ounce, will get built. But we've just sort of confirmed that we're going to be adding a significant amount of tonnage. So it's a conventional underground operation. We're looking at, you're going to be about 75 to 80% long hole stoping, the remainder cut and fill. In terms of domestic production, with this whole tariff threat between Canada and Mexico, having a domestic source of silver production in America could be huge for us in the sense that domestic ounces should trade at a premium if they're going to tariff the ounces from Mexico and Canada. As America is a net importer of 75% of their silver from Mexico and Canada. So having near-term ounces like this in America will be a big deal. We should be trading at a significant premium. This will be one of the largest silver producers in America when all is said and done. Just our contribution, if I were to break down our 8.6 million silver equivalent ounces, that's about 4 to 6 million ounces of silver annually and between 55 and 67,000 ounces of gold every year. Now, because the grades of our gold and silver are so good independently that really you can take whatever byproduct credit you want. If you were to use gold as a byproduct credit, we're producing silver at those base case numbers at negative 22 cents an ounce. So you're getting a free ride here. You could do the same with silver. We'd be producing negative cash costs for gold. But really together, you're looking at about 50-50 breakdown in terms of the economics, in situ economics here. Really what we're going to be doing with our drill program, it's two-pronged. We're addressing 2 things that should stand out there. One is at the base case levels, we're looking at a 2.3-year payback period, and the other is the 8-year mine life. We're using the mine plan that's laid out here to go back and drill out the first 2 to 3 years of production. Our goal is to drill about up to 1.5 million tons of material, which at a 1,500 ton per day mill, that's about 3 years of production using this. So we want to effectively de-risk the investment decision to go underground, make it bulletproof, and that's what we're doing. And I think as a function of the grade profile that we've been hitting on our M&I program so far, and higher silver prices, you're going to see that payback period actually compress significantly between now and our next PEA for Q2 of next year. The other thing is, most people want to see a mine life 10 years and beyond, so that's the goal of our expansion program. So we're drilling out, and we're going to be adding some brand new tonnage at the front end of the mine life, which should help to really, really put a lot of leverage to the upside on our economics. And then we're going to backfill mine life on the back end, which will just give us more years of joy. So here's how our production profile and cash costs compare with every other operating silver mine in the world today. At 8.6 million silver equivalent ounces a year, very, very, very similar production profile to Silvercrest that just got bought for about $2 billion. They're in their second year of commercial production. They did just a little over 10 million ounces at very similar cash costs to what we're projecting. And they got bought out. Similar, you'll see right next to Silvercrest is Santa Elena, which was the original Silvercrest 1.0. That got bought out. Our production profile that we're outlining here will move the needle for just about every silver company in the industry right now, and a lot of gold companies too, given it's a very, very straightforward process that we've got outlined here. So in terms of the next couple of years, as I said, we've got one of the more ambitious plans, I think, of any other sort of silver company in the industry, given drills. We've got 3 rigs at site turning right now. We've got 3 different studies planned over the next 12 months. We're gonna, right now, 100% of our ounces are inferred. So I think one thing that the market will really want to see, and I think we'll have a significant re-rate potential on, is delivering our M&I resource in September or by September of this year, in addition to our expansion resource, which will be in Q1, and a new PEA in Q2 of next year. In addition, as I said, we're kickstarting our permitting process, and the big idea is we want to be in a position with all the drilling, with all our front-end design engineering, to get underground in 2027 and bulk sample this thing. And as I said, 100,000 tons at the grade we're looking at should be pretty exciting. So this is Tonopah today. Really one of a charming, historic mining boomtown. It's about 3 hours from Vegas, 4 hours from Reno. The highway that connects the two runs right through the town, as you see right there. But it also cuts right across our property. Tonopah 100 years ago was like the place to be in Nevada. That Mizpah Hotel there, that was the tallest building in Nevada up until the 1930s. It's now also known as the #1 haunted hotel in America. So it's a really cool space. But this is that same street 100 years ago. So it was discovered in 1900. Now, Tonopah was one of the most advanced mining camps in the world for its day, and something that should really stand out in this photo is you see it's the era of horse and buggy, but it's got power lines on it. Tonopah was one of the first mining camps in the world to use electricity in their underground trams, and they had electric hoist houses, and they used electric water pumps. And it was that reliance on electricity that actually sunk the district, because historically, the district was discovered from big outcropping veins at surface where the town of Tonopah is. So it was discovered to the east. And over time, the old-timers followed the veins underground. They did no drilling back in those days. They were just following the veins with their eyes and mining the thing. And effectively, it was seen as an east-west vein corridor. So in the mid-1910s, a really, really well-capitalized company called the Tonopah Extension Company, they started gobbling up everything they could on the western half of the district. They bought a whole bunch of companies, knowing that, I guess, skating to where the puck was going. And when production finally got to their property, which was right at the edge of that purple claim block there, they encountered the thickest vein in the district, got mined down to the 1880 level, and as they went deeper and deeper, the vein kept blowing out. But they flooded out the mine, and they decided to use electric water pumps to pump out the water. Wasn't all that much, certainly not by current standards, but electricity wasn't all that reliable back then, and oftentimes they'd turn the pumps on and the whole town would go black. Not quite ideal when you got a bunch of people, nearly 2,000 feet underground. So a guy by the name of Charles Schwab, who was the CEO of US Steel at the time and one of this company's largest shareholders, gave them a note. They said, okay, well, let's build diesel generators and heavy-duty water pumps in my foundries over in Europe. That was in 1924. Took 4 years for those to be built and shipped over. By the time they were installed and commissioned, the Great Depression emerged, metals prices tanked. Schwab told all his buddies what a good story the Expansion Mining Company was and sold all his shares, and then he called on his note. They couldn't pay it back. We're the first group to get our hands on this since production shut down. We're the first group to drill it. We said when we picked it up, if the historic records are correct, we're going to drill something that's 24 meters thick. Our first drill hole hit 30 meters of a kilo, and we hit 2 other veins stacked on top that the old-timers didn't know about. So since then, we've now drilled out 4 kilometers of cohesive mineralization. As I said, 100 years ago, this was known as the richest place on Earth. And we've got built-in upside, and what we're going to be doing on the drills and incorporating into our next resource, it's a paint-by-numbers approach to growing this resource. So the red and gray areas, that represents our 100 million inferred ounces that are currently laid out. But what you'll see is, well, in our mine plan, we only incorporated the Victor Zone, which is that last mine in the district, which is on the eastern side, and that central area. We omitted a 12 million ounce deposit called the Northwest area, which is the exact same vein corridor. It's just a kilometer away. We've got a kilometer gap in. Well, it's mineralized on one end, it's mineralized on the other, and just last week we announced that we've connected on the first 500 meters in our expansion drilling. So we've got this gap which we're going to be looking to close. If we're successful in closing that gap with a further expansion drilling and getting that whole 1 kilometer incorporated in, we think there's another 30 to 50% new tons there. In addition, beyond that, our mine plan will be able to incorporate that 12 million ounces into the next update. So we did, I think, 49 drill holes last year. So we did 9 widely spaced holes across that 1 kilometer gap, which is effectively looking to add mine life on the back end, But you'll see the bulk of our drilling was in our M&I conversion program. And the reason that's where the bulk of the drilling is because that area of our project is where the veins project closest to surface. So for the purposes of the PEA and our last resource, in fact, we only tracked mineralization. Mining starts about 200 meters below surface. Well, our M&I program, we've been tying things together really, really well. We're drilling this whole area out on 25-meter centers, but something really interesting happened, and that's that we've tracked whole new zones of mineralization up dip, so outer board of the current PEA. We've brought mineralization about 50% closer to surface. We're drilling high-grade structures from 130 meters down hole, so we're going to be adding a whole lot of new ultra high-grade tons at the front end of the mine life, which is going to has the potential to blow out the economics. Obviously, you add high-grade tons at the front end, that's got a lot more value than adding mine life on the back end, but we're doing both this year. In fact, we hit our highest grade intercept ever at the project up dip. It was up to 8.5 kilos, so things are looking pretty good. Mine plan's very straightforward. It starts shallow in those two zones. And in fact, as I said, the mine plan is going to change a little between this PEA and our next one, simply because less pre-production development required to now get at it. So imagine new tonnage being added, new ounces being added north near surface on those initial two structures as the PEA ramps down. And then you'll see over the years it goes deeper and deeper, ending up at the Victor zone in year 8, which is underneath where the old timers left off there. Very straightforward mine plan. I mean, the whole thing's on private land, so you're looking at a very expedited permitting process. If we're on federal land, it might take 10 years. With this, as I said, we should be in a good position to break ground on this thing in 2027 for a 100,000-ton bulk sample. Really easy metallurgy, some Merrill Crowe. This will be one of the few silver projects in the world that can be a doré at site. And last but not least, just to our valuation, there's really only two other high-grade stories in the industry. There's Vizsla and there's Dolly Varden and there's us. In terms of resource grade, it looks like we're about the same as Vizsla and close to Dolly, but there's a difference in terms of how we present our resources. We present our resources with dilution already factored in, so we present block diluted, whereas the others typically present undiluted. So, where there's no hiding the ball is once you actually look at things inside a stope and you're looking at head grades. And as I said, we go to 570 head grade, and the others take a step down because they haven't factored in dilution. So we're the highest grade ounces in the industry. This is EV ounce in the ground. We're the highest grade ounces in the industry, and I'm trading at a 50% discount to our other high grade peers right now. We think part of that's just because our ounces are 100% inferred. Well, we're going to be correcting that with our new M&I resource, and we're pretty confident that our structure that we're drilling into right now is going to be the highest in the industry in terms of M&I numbers, and that should really put us in a good position to get into some more of the ETFs this year. We just got included into SLVR, which is Sprott's new silver-focused ETF, but SILJ, SIL. They're looking at developers, and they've started giving heavier weightings to American and Canadian projects. So that's blue ocean for us. We're 50% discount to our peers. We're going to be more active in terms of getting new studies out. We've got multiple re-rates. We've got built-in upside with our expansion drilling going really, really well. And I think the best is yet to come. We made our discovery 4 years ago. This thing, will be underground and hopefully seeing these veins for the first time in 100 years in a matter of quarters. So with that, happy to take some questions.